Welcome to another stage analysis video. It's Wednesday the 21st of December 2022. I want to start tonight's video with a brief overview of what's been going on with gold and silver, the precious metals, and versus the dollar index. As there's been a number of precious metal stocks coming up in the watch list scans recently, as gold and silver have been testing the top. Well, gold itself has been testing the top of its stage one base, potentially testing that stage two breakout level, and silver has broken out into stage two recently. But obviously the silver stocks themselves, not many of them have actually broken out into stage two. So it's an interesting pattern at the moment. And I just wanted to have a run through the charts and see what's going on here. Gold especially, I find quite a intriguing chart at the moment. It actually reminded me back of when back in 2008, near the end of the year, similar period to this, where gold and silver, physical metals, started to actually push higher ahead of the market. So the market didn't bottom ultimately until March 2009, but the precious metals were one of the earliest movers there, and we've seen similar move at the moment in terms of the precious metals have been moving up in stage one and potentially a few breaking out into early stage two. So with gold, you can see it's been outperforming since started to similar point back in October time with the rest of the market. It's actually broken back above that 30-week moving average and started to consolidate around the top of the range. As you can see with the previous levels here, we've got a clear level potentially for a stage two breakout. So if we do get a strong move up through this 170 area in the GLD, for example, ideally want to see some strong volume come in if it does attempt to break out into stage two. And the relative strength is above a rising zero line here, so it's outperforming the S&P 500 in the medium to long term as well there. So if we actually look at the analog versus what went on in 2008, so you see at the moment the move back above the 30-week moving average here, which is still declining. It's this blue line here. You go back to 2008, similar period, December the 26th week in 2008, it had just moved off of the lows. As I said, it was starting to come back through the 30-week moving average. The 10-week moving average here, as you can see, is still below the 30-week moving average, so still not in a technically great position. But if we start moving through the weeks here into the start of 2009, see it actually tested the top of the range there and then started to pull back into the 30-week moving average for a few weeks before starting to break back out again. So there's a potential stage two breakout point early in January there. So, and then continued on. So if I actually push through the year here, as you can see, it actually came all the way back in for the backup point into early stage two, and then tested it, and then as the year progressed, if I flick through this a bit more quickly, you see it actually moved off and finally moved off to new highs, and then started to move into a much stronger stage two advance. So I won't go on from that, but if we go back to the current chart, so that's one potential scenario that could happen. Obviously, it could still fail here. It could break down completely. We could, like at the top of the stage one range here, often we get a pullback all the way back down to the bottom of the range again. We could obviously chop around for ages. We could just continue back down into stage four. But obviously, going by the 2008 analog, what we'd be looking for is a pullback into the new year, and then some kind of push out back towards the old highs here. Whether it actually gets back up there or not, obviously anyone's guess at this point. But at the moment, looking for this kind of behaviour, the 10-week moving average rolling over here, starting to outperform, and then potentially we could have a stage two breakout attempt early in the start of 2023 in the gold, physical gold itself. And then obviously by proxy, the gold miners would be thrusted up further into early stage two, with many of those already, as I said, from the watch list scans that I've been doing, have been moving into stage two. So with some still in late stage one, but there have been a number of early stage two breakout attempts in the gold miners. We look at silver by comparison. It actually broke out into stage two 4 weeks ago now. Broke down from this declining channel that it had been in for the last 2 years. So a big range that you can see it's like broken its stride, started to push out of there, and we're now looking for, again, if this starts to pull back in, it's in a zone of potential resistance at the moment here. So if it does actually continue to push up, we could expect it to come back in a little bit. Ideally, with a stage 2 breakout, you don't want to see it come back into the stage 1 base. So basically, you wouldn't want to pull back below that $20 level. Ideally, you'd want it to hold some kind of backup and then to make a continuation. That tennis ball action that we look for. Again, this is above we've got a rising zero line here, so the 52-week moving average of silver compared to the S&P 500, and you can see it's starting to, relative strength is starting to make higher highs here in the near term, starting to break some levels. So whether it's hasn't broken the top of the, what was that one, the February-March period here, the UTAB, but you can see relatively, obviously price action is still in a down there, but whereas the relative strength line is obviously horizontal here, so showing a much more relative strength in the near term there. And like I said, with this is actually different in terms of with the individual stocks, as there's not many silver actual miners that have broken out into stage 2 yet, as they took a lot more damage than some of the gold stocks. They were a lot more heavily hit. So there is a few, I think, HLs in the watch list today, again, potentially in early stage 2 at the moment. But a few of the other silver stocks are still developing in stage 1, and some are still potentially even in 4B minus. So they've potentially bottomed, but they're obviously they're under a heavy overhead resistance. So there's a lot more stage 1s in the silver miners. We move on to the dollar index here. Obviously, this has been a big trigger for the precious metals since it topped out. So I highlighted the buying climax back at the time of the week. So what we constitute a buying climax on the weekly chart is you get a new 52-week high and a reversal with a close lower. So that's on a 52, what we consider Investors Intelligence does a bunch of buying climaxes and selling climaxes each week, and that's how they define it. Obviously, there's the Wyckoff way of doing it as well. So either or, it doesn't really matter so much. It's just the fact that it was a clear buying climax. There was a push up, it got extended and started to have an automatic reaction, secondary test, started to build a range on the daily before starting to break down more considerably here, and has now been drifting lower. But you can see it has been grinding a little bit here. So there is a little bit of a wedging action going on. So potentially there is a chance that it could suddenly spring back out again at any point, as if it tightens up in here, but doesn't necessarily mean it's going to go all the way back up to the top of it again. But that would be a big negative for the precious metals in the near term. So if we go back to the weekly chart here, but it wouldn't be surprising. And as I just said, with when we were going through this, actually with the analog from the 2008 that I was looking at, we are looking for some kind of pullback. So if the dollar rebounds, then that potentially could cause the pullback in the gold and silver miners and precious metals themselves. So it'd be interesting to see if this can actually get some kind of rebound back up to this declining 10-week moving average here, then start to roll back over again, which would then potentially give that push to the metals again once more, and obviously stocks itself, as they've been trading inverse to this as well in the near term.